I am going to lose subscribers for this, but I'll say it anyways. In venture or private equity, investors don't invest in products. They don't even invest in companies. They invest in instinct. Their instinct about you. That is why some people raise hundreds of millions before a prototype even exists. Let me explain the mechanics. Because once you understand this, you will never look at capital the same way ever again. Now, investors like to pretend they are rational, that they are making decisions of due diligence and models. But here's the dirty truth. The largest checks ever written weren't logical. In fact, human beings are not logical, they are instinctive. I call it the investor's secret instinct, the ability to sense whether someone is a market inevitability, the kind of person where even if their product isn't finished, even if their company doesn't exist yet, you know they are going to bend reality until it does. I mean, look at it, think about it. When Elon Musk raised money for SpaceX, rockets were exploding. When Steve Jobs pitched the iPhone, no touchscreen supply chain existed. When Jeff Bezos raised early capital for Amazon, there was no proof e-commerce could scale. But capital still flowed, billions of it. Why? Because investors weren't backing product, they were backing certainty of execution. Execution lives in people, not in prototypes. Now, here's the nuance. Investors don't consciously admit this. Of course, they dress it up in jargons like TAM, competitive moat, IRR projections. But behind the spreadsheet, they are asking a primal question. That is, if I wire this money, does this person make me feel like the future is already written? That is it. That is why charisma, narrative, and energy matter more than patents. It is why some founders walk into a room and leave with $50 million, while others spend years perfecting tech no one funds. See, capital is cowardly, but it is also greedy. It hides in data, but it hunts for certainty. Investors are constantly scanning for people who embody inevitability. And here is the kicker. You do not need the finished product to embody inevitability. You need the frame, the law of investor gravity. When I sit with investors, I don't talk about features, I talk about trajectories. I don't say, here is what I am building. I say, here is the inevitability that is happening with or without you. The only question is whether you want your capital inside it. That is how you flip the instinct. You move from pitching to pooling, from chasing checks to magnetizing them. And when you hit that frequency, when you are no longer asking for investment, but positioning as the place capital needs to be, investors stop seeing you as a risk. They start seeing you as destiny. That is the investor secret instinct. Not about your product, not about your pitch deck, about the certainty you transmit. And when you can do that, people will invest in you before you build.